Welcome to the model of ninth wave. Superior inventions for financial markets using 369 forecasting research and development.
Hello friends, welcome back. Today we are discussing the channel surfing and projecting the targets and setting up some expectations for the extremes so you can have a structure of the market under your belt so you can plan ahead. If this happens, I will do this. If this happens, I will do that. And then couple of if then else scenarios are at play. You use your technical analysis. I think most of you know more than I can ever discover. For example, if you use this oscillator, some of them conditions will work, some of them will fail because market is going under extreme pressure. How do we know the pressure is over? How do we know this is a good risk-reward inflection point? So channel surfing can help. But I just put this right here. If you look at this regressional channel, if I put it like this, now it makes sense because the channel has been already established, right? But you can see it is channeling. That's the point. The question is, how can we, if I place it the way I'm placing it, right? This system is doing it as it finds the pivots. The bigger point is the market algos channel working for very large institutions. I can tell you one of the, you'll be surprised how bunch of models, they do very simple things. For example, they use parabolic SAR, but not the way public uses, because anything you see in public domain, they know where their inventory is going to be found. So always break all the rules. Anything in public, they tell you to these other rules. Remember, the big fish, the sharks also know those rules, and they have billions of dollars and thousands of employees, PhDs sitting there as well, right? Which you have to compete against. So now what I showed you, the channeling is going on, but the problem is, how do we know at the initial part of it the channel is established and which channel to do, right? After the fact we can do that, but the main point of me showing this was the channeling is kind of critical, important market structure phenomena you need to understand. If you don't, we had a release on this earlier, 3-hour videos on cosmic channeling, but I would suggest that you look into this further. I'm just gonna set a stage here, some ideas here, and it will help you tremendously, because we are dealing with the raw. If you see, there's no indicators here, right? We just deal with price, pure price, and this is where it is difficult also, because once you understand the structural flow, then comes all the targets, which we have hundreds of ways of doing it. Timing the market, we have 50 ways of doing those, right? But fundamental behind all this is, where is my value? Where bank thinks is the value, from where they will put their money in, and where they're shooting from value, jumping from value to value to value to value to value. And underneath that, there's a structure also we can simply identify. Alright, so let's start with a blank slate. I just picked one chart from our list of charts. We can add, since this is fully automated levels, if you want me to put on 4 more stocks or 8 more stocks, I can. I'm just posting these levels. So let's pick one. Let's pick one. NVIDIA is as good as any, right? Because the laws will never change. So I think I hope I made my point. So understand the potential turns. If you do your homework every night, first thing in the morning, so you know that what trades you are working on, which stocks you're working on, is good to have these probability areas. We are not dealing with absolutes. Even with our quantitative research and 90 patents pending formulas, still we are not 100%. No one can be. As I stated, that master formula is only with the creator of the universe, right? Whatever name you want to call it, or call it energy, there's an order, and we are discovering those orders and building quantitative finance around it. That layers of knowledge goes higher and higher and higher and deeper. But fundamentally, by doing basic things, you can see the structure. First thing we have been discussing is value, which we are posting. They don't make billion-dollar decision randomly and then you see it on the order flow or inside the bar, whatever technical analysis, but there is a plan which follows. This is only 30-minute or intraday, but there's also weekly, and there's a monthly and quarterly, where we drive the huge cycles and huge trends from. So that is the reason when we are printing those earnings, we're not dealing with this, we got a spike for $10 and we are rich. No. We want to be able to detect the long-term trend directions. Long can be 3 months, 2 months, because natural flow will be generated by these folks, right? Pending any erratic news, right? So we will discuss that later. But at this point, even in this small window of 1 month, there is a channels going up and down and up and down, right? So I hope I made my thing clear. So let's talk about two techniques now. AB. So now, if you think this is, we started here, right? So we need 3 points to create a synthetic channel. A, B, and C. Simple as that. The simpler thing would be, I take this. We need, now there are advanced techniques which I can just simply do 1 point click and it'll give you the trend line forecast, right? That comes from different astrophysics science. But to start with, anybody can do at their own desk. I'm assuming these tools are available. I'm using multi-charts. So I like I think, TradingView, everybody has those. So this is called modified shift pitchfork. And before I explain that, how we can use it, I'm pretty sure you guys already have some information on all these channels. So the idea is simple, right? First of all, simple things. A, B, and C. This is my A and this is my B, right? So let's do this, something like this. Then what I can do is simply clone that drawing and put it in the bottom. So I have this A, B, and C, right? Or I could have done a smaller one too, A, B, C. So I took 2 points, A and B, and I just cloned this drawing so the angular momentum is kept the same. So what A, B, and C, this is giving me a synthetic channel. So it gave me more information than I started with just by using 2-3 points. You could have started with small ABC also. It will give you a small channel like this, right? And then you can adjust it. And you can also keep 2 of them. So all you need is A, B, and C. So let's plot this. Okay, I have A, and then I had B. We do very complicated geometry from the scriptures, which I think we can pinpoint every turn. And this is shocking. It comes to a lot of meditation. Even though we have done a lot of PhD mathematics, nothing comes close to meditation, right? Because you have to connect to higher subconscious mind, which it doesn't know, right? What do you want? Then we are dealing with the last stage of human evolution, which is you are spiritually growing at the higher level. First of all, private is a private enterprise. More you spiritually grow, easier this science becomes, and you'll be shocked. This whole science is following the structure of the universe. With different formulas, we can detect those structures, right? It needs the years of dedication. But again, I'm saying all this over and over and over, not to be a preacher, but I'm just trying to explain that there's no randomness in the market. What we can start with is, where is the value and where is my channel and where are my targets. I explained in the last video 111, 222, 333 angel numbers. They all come to 369, 369, 369. And that's why we do everything with that vortex 369. Tesla said same thing, right? But there's a lot of complex investigation and research. So this is a simple thing to start with. All right. How about this ABC? All right, I think enough of motivating you to use this. Right, so keep doing this. So this is a little bit of manual way of doing it. 2 points and clone it and do it. So see what I did, right? A, B and C. It's a triangle where B is between A and C, A, B, C. And again, as I said, I believe Blake all the rules. So this is A, this is B, and this is C. So it seems like we are able to look at the structure and you can see why market is doing what it is doing, right? So in this 5 days, trading every day 10 times a day is not a good idea, personally, because bigger the structure, endpoints of the structure, risk goes down, right? That's all there is. So that is, I think, the story. Let's do one last coming down. So here, market is going, it broke the structure. Okay, again, this is all. Let's do this ABC. So this is A and this is B, and then we clone it and we offset it. Now where is ABC here? A is here, B is here, C is here, right? It doesn't take too much time. Simple. So at least what is happening is your mind is able to make some moves and say, okay, seems like if my philosophy, if my theory, my analysis, my petition for giving me profits to the universe is aligned properly, my risk reward is probably edging towards my, let's say, is edging towards a positive outcome, right? Probability. We are increasing the probabilities. So now you have any oscillator. We just show you this example. Any oscillator, you can get it. There are hundreds of them, 300s of them, and if they are not sufficient for you, you can also build your own. But those things come later, right? At the last stage for filtration and better ideas. So we got this. It hit it here. Shall I go long and short? This is where you can ask the oscillator. Again, if you see the moving averages of dozens of oscillators inside one, release of pressure, short, add the channel. Makes sense, right? So this is not to pick the ultimate top and ultimate bottom. This is to join the trend, the prevailing trend. Same thing here. Look at this oscillator. It says, okay, probability of going short. Now, there we go. Now this is done on, you can pick any 5-minute chart, 10-minute chart, half an hour, daily swings, based on, the idea will not change. All right, let's do one. And then we'll go back to shift and that will expose ABC. So I need to have ABC structure. And I could be wrong also. For example, if I pick this one is broken, if this is broken, I want to use this area where it broke, A, B, and C. So let's do this. So this is my A. and C. Let's extend it, right? So A, B, and parallel, clone. Okay. So now we got this idea of trend line, but converted into channels. So we have A, B, and C. We pick this. There's no guarantee that we picked up the right or not. The market comes there, and this is where we get some other help. So now based on this, we are able to get little better results, probability, right? And if you look at the oscillator in the end, this is all channel surfing. So here, same thing. The story is pretty simple. Having the right location to trade saves us a lot of trouble. Right? So I think we got better information than where we started, right? We're getting some good setups to play with. This could have been done too because of the oscillator, right? It is not a tick level precision, but this is what we are getting at. So it is revealing the structures. All right. Now I think we got the idea that channel surfing helps us have a structure, how it is unfolding, and have us think through this edges where we have high probability of making success of this business. So let's do one thing now. Now let's talk about this modified shift. This is simpler if you don't have that tool or don't want to use that tool, which I'm going to talk about, and it goes on and on and on. ABC, right? Simple. So let's remove all drawing. Okay, back to it. Now you understand why this is there. So now as people evolved and did more research, they came with new ideas. And this Andrew's pitchfork, shift pitchfork, modified shift pitchfork, I think they're all available in all the tools. So the idea is pretty simple, same thing, A, B, and C. So in my 4-hour video, which is a free course, which I think I also pointed out in the system. So what we do is ABC. When I see ABC, I do this. Now this has two powerful events. One, we will use it to time the market, and second, to get the structure of the market. So let me see what I have here. So these are the simple 0.5, 1.6, 2.2, 4.2. You can come with your own ratios. As I said, you guys have a lot more knowledge. I'm just here to help you put that knowledge to maybe practice. All right, so there we go. So this ABC is saying that market should be channeling and spiraling. Let me take a picture of this, because market unfolds in multiple dimensions, not only the dimension we look at. We looked at this channel, don't worry about it. We will fix it because we're going to adjust it and curve fit it the way we did our ABC trend lines and parallel lines. So market will pick a channel and it will spiral like this. Market will pick a channel and it will spiral like this. That's why we use a lot of spiral mathematics in our forecast and ideas which we do like this. So going back to the same thing, edges. How do we find if my channel is correct or not? The midline is right here. Market will always pull back. It will channel up, but I forgot to mention that it is rotating and channeling through the mean. There's a mean medium mode we all learned in schools. So let's talk about the mean only, right? Even though I'm spiraling and channeling, I'm still focusing on my mean, right? It will go like this and then come back like this, come back right here. So this mean is what this channel is telling, that hey, you are spiraling in this fashion through the mean. So this modified shift is going to help us understand how far have you gone off the mean, and you'll come back. Because market is not going to go 90 degrees and 90 degrees and 90 degrees and 90 degrees or 45 degrees or 45 degrees forever, right? Okay. So this modified shift, you can use natural shift also. Shift. So right here. So is this, how do we know? Initially we don't know. We put it here ABC, we got some reaction from this back to the mean. Look at this guy. Now saying, okay, pressure is down, 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 it's going to go up eventually from the mean. And it went up. And this channel, obviously, we don't know if it breaks through this, break through this. We don't know at that point initially. So, but we also know that, hey, this channel is giving us ABC. So how do I fix it? How do I realign it? This is where I say, break all the rules. Who is telling us to? But rules with some little bit alternative rules. So we know that we got a couple of bottoms, trend lines moving in the direction. That means my mean is not in the correct direction. Correct? So how do I fix it? Let's shift it. And nobody is telling me. Now I will not move this is ABC. I will pin my B and C. I think I go through a lot of detailed examples in my 4-hour videos, which I think is also on the internet somewhere. It's also posted on this Twitter. I don't know if you can search Twitter for those or not. Now it is telling me I'm better off aligning. This is a cheating we do by being a little smarter. That hey, this is my, if my bottoms are showing up in this, I want my mean to shift in this direction. Small change, but the rule is pretty there. Keep your B and C pinned. A, you can move up and down, but do not move the location. There we go. So I can move up and down, up and down, up and down, but on this location. And I'm trying to cheat to get my curve fit done properly, and there it is. Well, let me do it properly. There we go. Now you see the whole structure has been revealed beautifully. So what we did, we cheated. How we cheated? We just said break all the rules. These are my tops, so and the bottoms. If you're going down, I will do the same thing here. I'll show you. So I'm aligning my mean in this direction. And then this is a better fit. Now this blue line is 161 Fibonacci. Right here, right? Let's make it even much fatter. There we go. Now obviously you have done your thousands of hours of research. Maybe you have different numbers. I'm just making a point. Now which stock is this? This is Tesla, right? Now we have some structural philosophy that hey, market is going to rotate in the mean and I will only trade at this Fibonacci levels. Fine. So we will touch all those levels, touch all those levels, touch all those levels, right? When it gets there, I will make an informed decision. I'll make an informed decision that I'm going to take risk or not. Now here you can have your algos levels, you have your order flow levels, you have the levels which I showed you. Let me put them on. Now it makes sense what's going on, right? Now it makes sense what's going on, because this is how you evolve. I've been telling you that market rotates I think 70% of the time it will hit, especially in the futures, these green levels, right? Now look at, forget about the green levels because you may not be tracking those. If you can track blue also, that's more than enough. So, okay, now what's going on? When these levels are posted for you, you draw this channel on your own side already. You're tracking that, right? And then we say go long and short. You obviously need to know where to get out. Obviously, you will also have your own oscillator and your measurement, but this is without doing all this complicated stuff, hundreds of indicators right here, structure. Market is telling you what it is doing, and this is one way to reveal it, the way I showed you. To use this, and you can play with a handle. All right, so now it makes sense, right? Now market went short, went here, went to our levels, went to our levels, went to our levels on the top and bottom. When it breaks, we can start a new channel going this way. I give you all the rules. I don't want to keep on dragging this and belaboring the point, but I hope this helps you guys. Now at this point, now I can say, okay, my oscillator is, I think 20 things are ready to go up, 5 things ready to go up, or you have one oscillator which you trust is ready to go up. Last stage, there we go. And you can see here, this is where the oscillators fail. See this one? If you use MACD or stochastic, maybe let's put stochastic. Just for the point. Let's get rid of this. Okay, let's put stochastic. Just to make, let's say we do a stochastic slow. Fine, let's keep the default, not touch anything. See this one here? This one worked very nicely, right? How beautiful it worked. Overbought, became oversold, and it went up. Great. But it did not, it was just, even RSI, same problems with everybody, right? It was a structure which moved it up, not this oscillator, because here is the case. It went to overbought again, right here. And it kept on going, kept on going, kept on going. See this one? That's why you cannot really trust these guys. You can use it for intention. Okay, I want to go short. But do not, now in the mean, it's a 50% probability it can go up or down from the mean. 50% probability it can go here, 50% probability it can go there. The probability is based on Markov chains. If you understand that mathematics, the next move cannot be predicted with more than 50% probability, and especially when you're sitting inside the mean, there's no edge. It can go up and down in either direction. So what are we about to do? We are going to take the extremes only. So now, when market is going from this extreme to this extreme, and if you did not pick this one, now does it make sense to go long here? Probably, because from the mean, it is going to hit this. When you're going from the top to the bottom, then you can take a short here, right? From this initiation points. Same thing. Why will I want to go long when I'm top of the edge? I want to go short here, right? So idea is to, where do you initiate your trades? Now the banks will do something different, right? They will see this one is stop here at this level. They keep on jumping from levels to levels to level. If I print all the way for last 20 years, 10 years, it will just keep doing this. Broke down here, it tries to get to the previous level right here. See that? It came down here, it stopped at the previous level. That's why I keep saying put these on your chart, and you can see some structure. Came down to the previous level. We don't know which level will they stop at. That's why we do alternate measurements, and this is one way to do that alternate measurement. So this one, same problem, right? We want to go short here. There's no context to take short. The oscillator is just not the right place. but you don't know that because the structure is unfolding, channeling is going on, and we did this trick to slope it the way I showed you, and now if you see, we can take very good swing trades in Tesla. You should be able to make $20,000 a month if you start doing this work easily on options swing charts. Now this is raw structure. Now you may love some indicators, nobody's stopping you, but use those indicators at the last step. That's why you see we don't have anything posted on indicators. There's no need to. The structure is there, folding, unfolding. All right, so I hope this helps. Watch this adjustment again if you like to. Now what we did not discuss is the timing module. How we can time the market with this same thing. Alright, so let's maybe, if you want to take a bigger swing, there's also some time sequence going on here. Let's see if we can identify that. So instead of doing this ABC, let's do a bigger one. Again, as I said, there's no guarantees of what's going on. So let's say we have ABC, this is correct. Okay, so why are we doing this? So what we do is on the A and B and C, the midpoint of A, B and C, this handle midpoint cutoff point, take this line and take this line and go to the center. This is a triangle. If you have Pythagoras theorem, as you know, a square plus b square equal to c square, right? This is your two sides. We know that two sides. We know side A and B. Now C is this side of a triangle. This can also be this side of a triangle. But midpoint is what we're looking for, because remember, we are rotating across the mean. So now this one you need a little bit, one or two tries and see. But if I do a small one, you'll get a lot of small changes. You can that will be, we want to slow down. That means we need a little bit larger time reversal window. So is this correct or not? We don't know either. So what we do? Test it. Okay. Was this a bottom? Or whatever it is going top on the top side, it will reverse to the short side. If it's going bottom, on the bottom side, sorry, it will reverse and make a bottom. Okay. So let me get rid of, well, let's keep it, but I think you got, I'll just put it vertical. How about that? Okay, so we got one hit. We don't know it's going to continue or not. We'll continue to post it the way it is, right? There we go. And now, again, this is not going to go to the perfect bar turn, giving the area. Okay, so now we have here the price from the channel we drew and the time. You have to keep your 4 or 5 charts, whatever you're trading, always ready with these things. So you have it, you know, in advance. You know it from here. You knew this, like, you know, 24 hours in advance. If the price and time comes here, I will take a shot. You have eliminated 80% of confusion, right? All right, so let's keep going. Top to top, bottom to bottom. So I'm just rotating. This is just a time window rotation. This one, you need a big move like this, big move like this, where the pivots are really good. And this one gives the same thing. It tells us the previous channel we had. Why I redrew this? I want a bigger time window. I don't want a small one, like, you know, every turn, every swing, right? We are not algos. There we go. All right, how about this guy? And eventually everything will drop off as we drop off the channel, and we redraw new channel. So what we did here, we got this turn, this turn, this turn, this turn, this turn. How about this one? Well, we don't know. Let's go and check. So we take this bottom, it gets me this bottom, roughly, right? Let's plot it. So this is how much time it took us. I just did it in front of you, 35 minutes. So once you have this channel, first time it will take probably an hour for each stock, futures, commodity, whatever you're trading. And then after that, you just have to track it. 20 stocks are difficult to do. And we do the same thing on this side. Now channel is going, as I showed you, we have a channel here, this way, and keep going on. Right, so you redraw the channel after you had 4 or 5 hits, market is going this way, it broke the bottom, that's fine. Now again, the inflection points where the market is going to be turning, you should expect a loss there, because we have taken along here hoping the surf will last forever, but it did not. So it shifted. Right, so that's why we say in 22 days you should be profitable 18 days and expect losses on the other side. And we go on this side now. A, B, and C. And we wait. There we go. Right, A, B, C. So we see, okay, market is revolving in the mean, so we test this guy. Okay, it worked. Now, one other rule, as is pretty obvious, is when you're slanting that heavy, which means we have the probability that you will not reach the end point on the top, because you will just pull back to the mean. You'll not have power to go to the other side. Again, you will learn this as you start watching and applying this in your trading. Alright, so now let's do one last timer. So timer is from the edge to this. And I forgot to tell you how to cheat first on the slope. What do we do? Okay, so we have this guy and we have this guy. That is one slope we can take. And then we have this guy and this guy, a slope we can take. So obviously, if I take the first one, it's gonna just go vertically like this. Initially, we don't know what's going on, right? But we just take probabilities. Okay, seem like it is channeling here, it's holding. Okay. So now if you draw this day, we're expecting next day and forward to get 2-3 trades. But this is not a multi-week channel where you can do the same thing on weekly, daily, so you get a bigger, longer holding options. 3 months out, 6 months out, vertical spreads. You can do delta neutral hedge strategies. You can do calendar spreads and whatnot, but that is tactical, right? Location and the direction and the time, we should try to converge them first. So okay, so this channel, if I had plotted this channel and again move the handle in the same vertical space to the initial slope, it looks like this. And it is revolving on the mean, spiraling across the mean, and it goes up, boom, came down, right? And then it left the channel. So that is one. And second one I showed you. So I showed you this way. And I wanted to show you the time. Sorry, this is not a fluke. Okay, so let's say we go with this ABC. The timer, I don't want a small time. I want next day the time which I showed you, which is going to work for the next few days, and then it falls off. It falls off because what we look into 2 dimension on the screen is unfolding in 4 dimensions actually. This is where the illusion is shown on the second dimension. So this is my height. Now let's see if we're getting any hits or not. From the top to this bottom, we got some reversal. Okay, let's put it right here, and then let's move on forward. From this bottom, we're getting some hit somewhere here. Okay, let's put it. Since it is slanting, the rule says you may not be able to push beyond the mean. So it went to the green level, everything is coming together, so that's fine. Let's try one more from this height. It got to this guy, again it is on the mean, pull back to the mean, and we are getting areas of here, we're getting areas here, right? How about this guy? Well, you have to look, this one did not come from anywhere. They were still sliding, which is fine. How about this guy? It went up from this, what level is this? It's, I think 0.5. Yeah. So this is 50% channel. So from this mean, as I said, we are going to go to the mean, or maybe a little bit here, there. You have to give some flexibility. This is not a precision science. All right, there we go. Then we got this. So it is revealing some information which is not known. Now, with this in mind, and this plots, if you're tracking the blue lines, now it makes perfect sense, isn't it? I hope it does. So when I'm taking a shot, I look at my green level is there, high probability. My channel was there, my time is here. Everything converged for an extremely high probability success. When I'm trying to go long, it is at my level, retesting the previous value, bank's value. Time is there, channel is there, everything converged together. Same thing here, it went back to, now you don't have the green levels, don't have to worry about it. That's why I gave you these channels to look at, and time also. Okay, but since I am plotting this, I think I'm showing at least last few days anyways. But see, you don't know what the price is, so don't worry about it. So here, the channel says, when I'm saying go long and short at these levels, right? We are coming out from the top of the channel, or a shift, sorry, I keep saying shift. Our job would be to take shots. And that's the reason one side works, they're just collecting contracts. That's all they're doing. Like opens here, they're collecting contracts. Once they have the correct contracts collected, they will push it down or up, depending on. So our job is to, if you're just trading stocks or futures, you may have to try a few times, as I said. If you're going long here, now you will ignore the longs because of this channel and the top. So we showed few ideas how you can pick just one direction only. This is, I think, this is pre-planned, pre-timed, and pre-direction picker method you can use, and then you have these entries. This is the algo entries which they will push from. Now this is Tesla. This is $5 up, $5 down, $5, $6 up and down. If you can pick the direction and the time, now you can do a little better, right? And the money comes from add-ons. You play with the system and say, okay, I'm fishing for 1 contract or 5 contracts or 10 contracts. And when my philosophy is holding true, I'm going to add on. This is how you go big. You add on by going big. All right, sir. So I hope this helps. It's a long video, but I think this might add some value, and I appreciate it. Thank you very much.